Hi, it's James Black here with the Canadian Securities Exchange and the CSE podcast. And today I'm joined by Ross Beaty. Now, before our discussion with Ross, I just want to share some highlights of his career. The career achievements of Ross Beaty are as multidimensional as the man and the companies he's founded and led over almost 4 decades. He's first and foremost a geologist with a passion for exploration and a discerning eye for projects with economic potential. He's one of Canada's most successful mining entrepreneurs, with 13 of his companies creating an estimated $6 billion of shareholder value since 1994. He built his flagship, Pan American Silver, into one of the world's largest silver producers with 7 mines in Latin America. Beaty is also one of the most influential people in the global mining industry for his pragmatic support of environmental causes, ability to build bridges with civil society, and a remarkable legacy of philanthropy. Please enjoy my conversation with Ross Beaty. Well, thanks again, Ross, for joining us on the program today. It's a sincere pleasure to have you joining us at the Canadian Securities Exchange for this conversation. We're in the midst of VRIC right now, annual conference here in Vancouver, and I know that you're going to be sitting down and talking a lot about gold prices. So I just want to jump right into it. There's a big disconnect with commodity prices today and the price of equities. What is happening from a year ago when you said this was going to correct?
Yeah.
We're still here.
We're still here. I mean, I got half of it right.
Yeah.
The gold price has gone bananas.
Yeah.
And that was a pretty easy prediction a year ago, and that's we had a pretty good year for gold, up 27%. And if you actually look at the market, for example, between February and October, the GDX, which are the large gold producers, was up 52%. And the GDXJ, which is the junior gold producers mainly, larger exploration companies, was up 58%. Right. So the disconnect did narrow a bit in 2024, but I will say the junior sector, the exploration stocks, it really hasn't got down to those levels. And a lot of that, the reason for that is the money has left the system. There isn't nearly as much money in the system as there used to be. A lot of the specialist funds are out, and the generalists haven't come in the way they normally do at this point in the cycle. And I thought there would be a catalyst of some kind. I thought it was the gold price going through, say, 2,200 gold. That would be that catalyst last year, and it just didn't happen. If you look at most of the volume in most companies now, especially the larger, more liquid companies, it's ETF buying, which is it's dumb money. It's not related at all to the quality of the company, or it's algorithmic fund trading, or it's the quant funds. They chase momentum, they chase liquidity, they chase changes, they chase specific words in news releases. I mean, it's kind of crazy, but it's not value related. So it's money that wouldn't normally flow into, say, private placements for the smaller companies. So there isn't as much money, and it's just not flowing down to the juniors. From time to time, you see these great movements in the successful juniors that make discoveries. And there's been a handful of those. There was one this week, actually today, Emmerich. So you have these events that give investors, 2 or 3 or 4 or 10 time returns. And that brings the sort of gambling money into the space. And so I'm hoping that that's going to come in more this year, either driven by the secular movement away from large cap names, tech names, for example, into these unloved names like the junior gold stocks, and or some other catalyst that drives money into the space, like generalist investors wanting to go down market from the major companies to intermediates and to the juniors, following even a higher move in gold. There could be any of those catalysts, but I nature abhors a vacuum. It's very rare to have these disconnects. Yeah. Normally markets revert to mean, and the mean right now with gold price where it is, either the gold price goes down or the equity values go up, and I'm going to say the equity values should go up. Might
I suggest that part of this, maybe there are a lot of indications that people should be getting into the market, and there's a lot of bargains to be purchased, but this old saying, stocks are sold, not bought. And in your experience over the 30, 40 plus years you've been doing this, I mean, are we seeing that maybe it's just hard to sell a stock these days and sell a story?
No, that's no different. That is no different.
Okay.
That is the steady state condition. You need promoters, you need people who are good at selling stock, and you've just got to get people excited about a story, and so there are better storytellers than others, and those generally get the money because people like people who are good storytellers. That's unchanged. It's the amount of money in the system.
Right.
It's the timing in the cycle of money coming into a system. It's having catalysts, be it be it great successful stories, and there's been a bunch in the history I've been in the game where, you know, the diamond market all of a sudden was nothing, and then we had this big discovery, and whoosh, huge amount of money flowed into diamonds. And this you can see even the last couple of years. You know, uranium. One day it's in the tank, another day it's in favor. Lithium. One day it's a hero, the next day it's a bum. And you know, these are the flows of money that come and go. And a smart investor tries to predict when the next move is going to happen and in what commodity, because all commodities are different. So right now, you know, I have to say, I think the best value potential is in the junior golds, in the explorers right here in Vancouver and across Canada, looking for gold. And I can give you many examples of companies. So, you know, one that's close to my heart is a company called Lumina Gold, which, you know, there's it's got a feasibility right now in Ecuador on this huge gold deposit. The stock is free. It's like 140 million U.S. market cap, 23 million ounces of silver. It'll produce 300,000 ounces for 20 years, and you know, Wheaton just did a financing facility for 300 million, and you can imagine the due diligence they did. So that's a classic. That's like a textbook example of a company that should be 3 times what it's trading for, and it will be in the fullness of time in the next, I'm going to say, next couple of years. So. That's an example, but there's many other ones. The market's littered with really good stories that are cheap as borscht.
Okay, so then with that in mind, Ross, how does you say a generalist investor actually parse through all these stories? Because you go to the show floor, there's 125 companies, not all of them obviously in precious metals, but you know,
there's a lot of really good companies at this show, and a good investor is going to these shows and actually meeting the managers, meeting the people who are telling these stories and talking about their companies, and you can filter the good ones from the bad ones. A lot of it's just by meeting the people involved.
Sure.
You know, like everything in all cycles, there are going to be winners and losers, and a lot of it's not just the project, but it's the people driving it. It's the money they have behind them. It's the supporters, and it's all that constellation of factors that go into making a story a really good one or not a very good one. And you kind of have to, in this space, I really think people going to these conferences, talking to smart brokers who know the people, you know, working with the right entities that broker these deals. Lots of good investment dealers right now are following these stories, and there's crummy ones.
Yeah, and I mean, that's you've touched on it in Vancouver especially. There is an ecosystem here that is really knowledgeable about this sector, right?
For sure.
And they've had a lot of track record. And then Canada in general itself. I mean,
for sure. But this conference here right now is a good place to go. It's got a lot of the players, and you'll learn a lot if you're a generalist investor.
100%. You talk about flow capital. Is there anything from the political side of things? So today we're doing this recording on Inauguration Day.
Yeah.
And obviously we've seen we can foresee some changes in the Canadian political system as well. Anything about that you think is going to lend to policy changes, or some just brute force policy changes, I should say, that are going to make this easier on the mining industry?
In Canada or worldwide?
Let's start with Canada, but then we can broaden out to the world. Yeah.
You know, I think Trump, the bomb thrower, where is he going to blow up next, and how's that going to affect things like metal prices, commodities of all kinds? It's a bit of a crapshoot. I mean, it really is. He's so unpredictable, and he just loves disrupting. And so all I can think of there is it's probably going to be really good for gold. Right. I mean, the last time was good for gold. This time's going to be good for gold again. It's probably going to be really good for gold. Other metals, it's kind of going to depend on what he does. If he increases inflation, decreases inflation, increase interest rates, decreases interest rates, make the dollar stronger, make it weaker. All these things are going to impact, the values of these other metals. But in terms of a company doing business in North America, I don't think it's going to hurt.
No.
I don't think it's going to hurt, especially in the U.S. And there will be some flow-through benefits to Canadian explorers. But Canada's already pretty good. It's already a pretty good place to mine and to develop. I mean, Canada's been a real plus jurisdiction in the world. We just built a huge, in Equinox Gold, a huge gold mine in Ontario. Came on time, on budget. It's run well. Great place to work, Northern Ontario. BC's a great place to work now. Yeah. It's a lot of projects are getting permitted, and I think on the whole, it's a good time to be in the business right now.
Right, and so the flip side of any sort of economic catalyst is, can we do this environmentally sustainably? And I want to make sure that from your perspective, I just want to hear from you. How do you see that we continue to be good stakeholders to the lands that we're working on?
Sure.
I know it's something you're passionate about.
Yep. Well, there's no such thing as sustainable mining. It's an oxymoron. But you mine as well as you can.
Yeah.
I mean, mines are just infinitesimal uses of land compared to, say, cities or agriculture or any other human endeavor that totally trashes the land. But mining will trash a small piece of land, but then it gets reclaimed because mining is always a short-term land use, right?
Yeah.
Unlike a permanent land use like a city. So the trick is not, you cannot make it sustainable. It's ultimately going to end. You cannot make it pure environmentally good. Of course, it's the exact opposite of that in that little area that you're impacting. But the trick is to do it as well as you possibly can. Use as little water, no extra beyond the gate of the mine, any long-term pollution. Reclaim it really well. Look after your employees really well. Look after your communities really well. Treat it as an ecosystem of value, so that the value that comes from a mine, which is gigantic, drives economies, drives communities, drives employees and their families, and allows you to spend money on mitigating any environmental impact that a mine has. It's just the best, it's the only way to do business is to look after all of those things right now. And it hasn't changed. There's all this ESG and there's all these acronyms. But anyway,
there's a lot of terms in that.
Let's just stick to ESG, environmental and social governance, I think is what it means. I mean, a good company does that because it's good business.
Right.
You don't need a government to tell you to do it. You just do it. It's good business. Look after your employees, look after your communities, look after the environment, and you're going to make more money. It's a direct line.
Yeah.
So, this ESG movement, which kind of probably peaked last year, I'm going to say, particularly the equity, diversity, inclusion part of that.
Yeah.
Probably peaked last year. There's lots and lots of pushback. But I think it's just good business to think about that stuff and to try to do it as well as you can.
Right, but do you feel like there's outside influences now coming into the boardrooms at, say, your chairman Equities at American or at Equinox that, you have to have more conversations about this to, make people happy?
For sure, there's more interest. And as I said, I think it was more of a few years ago, there was a push by shareholders to make sure companies not only thought about it, talked about it, reported on it, and really focused on it. And I would say that push has probably peaked, but it doesn't mean companies are behaving any differently.
Right.
Because it's all important stuff. You've got to do it.
Right. And so we talk about the Black Rocks and whatnot.
Yeah. No, there was a lot of every single investor meeting you had. 3 years ago, you started with ESG. Now it's kind of the last thing you talk about, but it's not any less important as a company manager to look after.
Right, Ross. Last question from your viewpoint. You've seen this industry from so many different angles, but for us at the CSE, we really care about the small cap, the junior, the explorer. What's a point of optimism for them going into this year in 2025? What's something they should be looking forward to?
Well, I'd have to, first of all, you're not in this business unless you're optimistic.
Yeah.
It's a very tough game, and you might as well sell insurance if you're not optimistic because exploration is usually a failed business, right? Only one of 1,000 mines ever gets developed from 1,000 exploration prospects. So it's inherently a tough business, high risk. And risks often happen. They happen everywhere. Wherever you are, you've got risk. And I could spend 20 minutes talking about all the risks in the game. Mm-hmm. The reward, of course, is that if you find something, it's gigantic wealth creation for everybody, for your shareholders, for communities, and for everybody in the location where you found something. And so I'm, and that's unchanged. That's been the same way through my whole career. So really, an investor is trying to look for that. The juniors especially is looking for that 10-bagger. Yeah. And if he doesn't want that high risk, it gives you that high return. He's going to go down into the more highly valued stocks that have less upside but less risk. Yeah. I just think the market's got tons and tons of opportunity here in all areas, in all commodities right now. It's a very good time to be an investor, especially right now. I said the same thing a year ago. Yeah. That I just thought it was a great time to be in the junior space, and I put a ton of my money into the junior space a year ago. that's kind of just flat. It hasn't really done very well in that space. But it should and it will, and I'm looking forward to that. And maybe a year from now I'll come back and say, hey, finally.
Well, timing's everything. It's not easy to time it perfectly, especially in juniors, because like I said, there's a trickle-down effect. It's, first out, last in. It's always difficult, but if you're in it for the long run, we see the cycles. It always comes back. Hopefully this is the year, but,
Yeah, it comes back, and it is cyclical. Those are good observations. And like I said, we've had this wonderful run in let's just talk gold for a second. We've had this wonderful run in gold. We haven't seen the same run in the juniors, right. Even the more established low risk juniors like Lumina Gold, and those are the companies that should benefit when the sentiment changes and we get these generalists coming in. They're going to look for the more solid stories, the less risky stories. And those are the stocks that will move first, I think.
Absolutely, yeah.
And so I'm looking forward to that happening because it's very rare. This disconnect is extremely rare. Look back 70 years, and if you can do a pretty direct correlation between the gold price and the gold equities, generally speaking, it's a direct correlation. And it just went out of sync in the last, really since 2022. And there's various reasons for that, but it's odd. It's not likely to last. Things do revert to mean, so that means either the gold price goes down or the equities go up, and my bet is on the equities going up.
All right, well, I'll take that bet with you. Ross, thanks again so much for joining us today on the podcast.
My pleasure.
For those watching today, this is the CSE podcast. This was Ross Beaty, mining legend, joining us here in the studio at Stockhouse. Thanks for watching.
In my own mind.